Hey, this is Arthur Hill, Senior Technical Analyst with StockCharts.com. It is Tuesday, August 21st, and you are tuned in to On Trend, the show designed to keep you on the right side of the trend. So we got an action-packed show today. We're going to look at some bull flags in some technology-related ETFs. We'll see that industrials and financials bounced back really good and filled their gaps. We're going to debate between a support break and an oversold setup using XLE, and I'll also cover XES and oil. We'll see that retail is leading consumer discretionary. We're getting some upturns in banking stocks, and that could be positive, as well as brokers. And then I've got a bunch of stocks to watch. Bull flags in XLK and some tech-related ETFs. So I'm going to start off with XLK because it has been one of the leading sectors in 2017 and even here in 2018. All right, even though it's still below this July high, it's clearly very close to a 52-week high and in a long-term uptrend, and it's on trend. You know, you compare that to some other sectors like XLB and XLE. Well, clearly XLK is more on trend, uptrend, than XLE or XLB. And that's where we want to be focused, on the stronger uptrends. And if you look at this chart here, you can see it had a pretty nice surge in late July into early August. And then we kind of pulled back over the last week or so. And that's basically a flag, a bull flag. And it's kind of digesting the gains that we had after this surge. And if we get a breakout, that argues for a continuation higher, and that opens the door to a 52-week high. And that, of course, will be positive for the broader market. Now, I was also noticing a bull flag in cloud computing. And this one, you know, it seems like it's stalling out, but keep in mind, it's in an uptrend, okay? I would rather be focused on a short-term bullish continuation pattern than a potential bearish reversal pattern. All right, if you're looking for bearish reversal patterns, you're going to look for a long time because trends tend to persist, especially uptrends. And this is a 52-week high there in July. So we got a sharp pullback, and we almost got oversold. RSI touched the 31 area, and we got the oversold bounce. And after that bounce, we pulled back with what looks like a bull flag of sorts. You know, it's just kind of a tight consolidation with that decline. And now we're turning up and breaking out, and that could open the door to another new high in cloud computing. Now, keep in mind, when you're looking at these patterns, you're looking for the essence of the pattern, okay? The lines don't have to match up perfectly and be parallel. You know, you can allow a little bit of leeway. But here is HACK, the cybersecurity ETF, and it took a hard hit there into late July, but became oversold as RSI dipped below 30 there at the bottom, and it got the oversold bounce, and then it had a 5-day pullback. And, you know, the lines, if you're looking at it on a 30-minute chart, it probably looked better as far as a flag is concerned. All right, but you can see there's been a 4-day pullback there with those blue dotted lines, and now we're breaking out to the upside there. And it looks like HACK wants to continue its uptrend. And just a little observational note, I took a flight over the last 2 weeks, 2 flights, and I was in business class, and the ads are targeted towards cybersecurity. So they're looking to target executives flying business class because cybersecurity is pretty much a top priority right now in the business world. Industrials break out and the financials fill the gap. Plus, I'm going to update that little island reversal I showed last week in SPY and show you a bullish chart on IWM. So last week I pointed out an island reversal in SPY and some gaps down in the industrials and financials SPDRs. And these were short-term situations. They had nothing to do with the bigger uptrends. And this is the thing, you know, it's really easy to get caught up into short-term situations when really it's just noise. And the longer-term trend is the important thing to keep in mind. Because if you look at this, you can see that SPY had that little gap up. It stalled for 3 days, and then it gapped down. And it continued lower for a couple of days, but then we got a gap up and a little like flag breakout there, and we're almost at a new high again if we move above that early August high. So it's better to look for bullish setups and things that will resolve to the upside as opposed to bearish setups and further downside, because the bigger uptrend is what is the dominant force, and that's what we need to follow. So last week I highlighted SPY with the island reversal, and I also highlighted industrials and financials as they gapped down. And here's that island reversal. You gapped up, you were 3 days flat, and then you gapped down. That created a little island above and below 285. Now that was a short-term situation, and the more important thing was, and as I noted in the article, was the bigger trend was up. All right, we shouldn't be looking for much downside, and predicting how much downside is very tricky because that bigger uptrend can pull Trump at any time, and that's what it did. You got a gap up and a little flag breakout 3 days ago, and we're on the verge of another new high in SPY. So the uptrend is, well, even that little short-term downtrend has been reversed, so now the longer-term trend is back up again, and the short-term downtrend has been reversed and it's up again. Now here's XLF, and there is the gap last week in XLF, and then you can see it just rallied right back. It had a little bit of a decline after the gap, and now it's up 3 days in a row and filling that gap and showing some serious bullish resolve here. So clearly these lows here now mark that first support at 27.5, and that's the level to watch for a failure. Also, when we look at the bigger trend, we can see the wedge line breakout there. And this high here is technically a higher high. All right, it's above this high. So we have a higher high working. And that suggests to me that the bigger uptrend is resuming. And that would be this move we had from September to January. And so XLF could be one of the ETFs hitting new highs come September, October. The industrial sector is even stronger, all right? Here you had this gap down, but you managed to find some support in that 74 area. You had a little spike candle there low. Well, it's not a candle, but a spike down to 74 and a strong close. And then we had that gap at 75 and a little flag breakout. So it looks like industrials are also continuing higher, and I would expect them to challenge that January high there. And you can also see we have a higher high here. We have a higher high here, when we have a higher low here in late June, early July. So the trend definitely since late April is up, and that's why I would expect, also with that wedge breakout, I would expect a challenge to the highs. And so if finance and industrials continue to stay strong, that's going to be very positive for the broader market. So the conundrum between a support break versus an oversold setup, we'll look at XLE, and I'll throw in some analysis of XES and oil. Now, energy has been one of the more frustrating sectors because, oil is in an uptrend. Okay, it's pulled back over the last 5 weeks or so, but, it was above 70 not too long ago, and it's clearly in a long-term uptrend because it hit 52-week highs earlier this summer. And then you look at XLE, and it hit that 52-week high in May, and it looked like it was stalling and ready to break out here, but instead it just fell down and it broke support here around 73, 74. And this brings up a very interesting or challenging concept in technical analysis. If you're a chart pattern kind of person, you can see that support level and you got the support break, and that would be considered bearish. You might even see this gap down here. All right. But if you're like looking at the trend and you say, well, it's not on here, but the 50-day EMA is above the 200-day EMA. You had a new high a few months ago. So it's safe to say that the long-term trend is still up despite this decline that we've had over the last 2 to 3 months. In addition, you've got RSI becoming oversold. So here's the conundrum. All right, you have this support break there on the chart, and that looks bearish, but then you look at RSI and you're like, oh, RSI is oversold. That's setting up a mean reversion play. And what I found is it's really hard to do both. All right, you kind of got to make up your mind. Am I going to watch these patterns, or am I going to look for these oversold bounces? Because a lot of times they're not going to jibe. Sometimes they're going to, be on the same page, but a lot of times they're not. All right, so what we got here as far as pattern would be a move above 74 would set the bear trap. Okay, that could be used for pattern trading. We've already got the RSI move above 30 for the mean reversion set up, and that is suggesting that we're going to get a bounce within this bigger uptrend, and that's the bigger uptrend here. Now I'm going to go ahead and jump to USO before I get to XES here, but here's USO, okay? It's in a long-term uptrend, all right? It might not be keeping up with West Texas Intermediate or spot crude because it is an ETF. There are rollovers. It's made up of a bunch of futures contracts. All right, but there's clearly a long-term uptrend here, and now we've pulled back over the last 5 to 6 weeks, and it looks like a falling wedge. You can see we had a pullback for, well, consolidation for 2 months roughly there in mid-January to mid-March. And then we had this pullback that, kind of lasted a little over a month, and then the breakout. And this one's going on a little over a month right now. So if we get the breakout there at 14.2, then that would be bullish. That would end this correction and argue for further strength in oil. And you can see RSI is coming into its oversold area around 30. It hit 31, 34 on that low. Now here's XES, the Oil and Gas Equipment Services ETF. And this has been a very frustrating trade because, I thought it was going to bounce here and then it fell to a new low. I thought it was going to bounce here and then it fell to a new low. So it just continues to move lower since May. Now, what is wrong with this chart? Well, if you compare it to some of those technology-related ETFs or XLT, the retail SPDR, clearly those are on trend. Okay, they're in stronger uptrends. All right, even KRE, the regional banking ETF, the defense ETF, ITA, has a stronger chart here. If you look at XES, it's basically gone nowhere since September. All right, almost a year. And you can't say it's bearish, but it is clearly not on trend, on an uptrend. All right, so there are other charts that look a lot better out there. Now, if you look at this, you can see, okay, well, this is a wedge, and it's probably retraced a little over 61.8%. And we had this big decline that produced an oversold reading, and now we're getting the oversold bounce. So, maybe there's a reversal in the works here. But, this has just been a frustrating one. And, maybe it's gotten to the point where I'm throwing up my hands and now it's going to finally break out. Sometimes it works that way. So, I'll be watching it as an oversold bounce it's kind of in a trading range, really. It's not in an uptrend because you have, an equal high here and you have kind of equal lows there. So maybe it's going to get this higher low working here and look for that breakout at 17 and change to reverse this wedge decline. Retail is leading consumer discretionary, and I'll also cover housing and the new communications sector. Retail is leading consumer discretionary, and I'll also cover housing and the new communications sector. All right, now we're going to move to the consumer discretionary sector, and note that this sector is going to change fairly soon because 3 of the bigger stocks are going to be taken out: Disney, Comcast, and Netflix. And they're going to move over to the new communication services sector. And that's going to shrink this XLY by around 3% overall because they are going to be taken out. And we'll look at that XLC in a little bit. But if you look at XLY, it's clearly one of the stronger sectors. It got back on trend here with that breakout there in late April, early May, and it hit a new 52-week high in June and July and August. So clearly an uptrend here and clearly one of the leaders. And a lot of that leadership is coming from strength in retail. And if we look at retail here, we can see that it got back on trend with this breakout in April. It actually broke out before XLY, and it had another big move up there in the middle of May and then to new highs later in late May, or in actually early June. We went through a consolidation period and now we're breaking out to new highs again. So this sector or industry group is clearly on trend and clearly leading the market. All right, this looks a lot better than, say, XES. XRT also looks a lot better than ITB, the home construction ETF. And a lot of these home builders and a lot of the stocks in here are also part of the consumer discretionary sector, Home Depot and Lowe's. Now they're performing all right, but if you look at the home builders, they've been struggling all year, had that big decline in late January, February, and then just been working their way lower ever since. This is one of the weakest industry group ETFs in 2018. Sure, you're getting all these positive divergences along the way, but they are not panning out because positive divergences in a bigger downtrend don't work usually. And so this one is one to avoid because it's clearly not on trend. So here's the new communications sector, and it started trading, but the holdings are still part of their original sectors. All right, Google's still going to be part of technology, but you can see the top two holdings there, Google and Facebook, account for over 40% of the ETF, and the top 10 holdings account for a whopping 80% of the ETF. And then we've got a real mix down below there with a Fox, Century, Telephone, Twitter, CBS, Take-Two, and you can see the holdings really go down in size as we get down to the lower end. So it's clearly dominated by these two at the top and then a significant drop off. Now, if I look at this chart here, okay, it doesn't have much trading history here, but that's probably a 52-week high based on what we've seen from Google and Facebook. And then we had the Facebook miss there and the big decline, and that's what weighed on the ETF here. We got a little bit of a bounce and now a pullback, and I'd be watching for a breakout here as a potential opportunity. Now you might say, oh, it's broken because of this gap down. Well, I'm still trading with bull market rules, all right? Google is still in an uptrend. It depends a lot maybe on Facebook, but if, communication services can get the breakout there, I think that's going to be bullish. Now we're going to turn to some finance-related ETFs by looking at the broker-dealer iShares, regional banks, and a couple of broker-dealer stocks. So the broker-dealer iShares has been one of the weaker groups since March. I mean, it's basically been flat. It hit that new 52-week high there in March. Yeah, it's got a lower high, but it's essentially been flat. And that was after a pretty big run-up into 2017 and early 2018. So this could just be a massive consolidation within a bigger uptrend. And what's interesting here is you can see these support bounces here, and we're getting another one. And if we get that breakout at 66, I think that's going to be the first sign that this group is turning up. And you can see RSI touched 30 there in the middle part of August to become oversold. So this is one I've got my eye on moving forward this week. I'm also watching regional banks. All right, KRE here has been in a pretty choppy uptrend since September. All right, it's had some pretty sharp pullbacks along the way there. You can see with those red arrows. And then it got oversold there in late June, early July and started to turn up. But it's been a pretty weak upturn, if you will, because it's failing to gain traction. But now it just might be gaining some traction here as it goes for a little breakout there around 64. So this is looking promising for regional banks. Now I'm watching two stocks here. The first is E-Trade Financial Corp, and it hit a 52-week high there in May, and then it kind of corrected here. You can see broken resistance turning into a support zone, and this little pullback here has retraced 38 to 50%. So that's about an average pullback within an uptrend. And it looks like we're trying to firm here. And if we get a breakout at 62, I think that's going to be bullish for E-Trade Financial here. Charles Schwab is another discount broker, and it hit a new high there in May and then pulled back pretty sharply, but it's finding support in that 48.50 area 1, 2, 3, and now 4 times. And it's been firming here, and it looks like it's poised to turn up. Now, in the bottom indicator window, you can see we've got what I call a bullish failure swing. And this was detailed by Wells Wilder in his book on new trading concepts. Now, it shows an RSI higher low, basically. So you dip below 30, you have a bounce in RSI, you pull back in RSI, but you hold above 30. And then when you move above that high there, which is around 60, that's a breakout for RSI. It has nothing to do with divergence, all right? This setup in RSI is completely independent of price, all right? Wilder wasn't looking at that. He was just looking at RSI. But there's a bullish setup in RSI, and we're seeing support in Schwab and looking like it could be poised to bounce. All right, and now we're going to go over some stocks to watch. I've got a dozen or so chart setups that you may find interesting here. So I highlighted Corvo earlier when it was breaking out of this triangle, and I thought that was a bullish setup here. And you can see this breakout fell flat on its face. So this is also the conundrum, all right, between the pattern trader and the mean reversion trader. All right, the pattern trader would have been active here, and you got in a whipsaw probably because you'd be out after this pullback. But the mean reversion trader would see that the 50-day is above the 200-day, price is still above the rising 200-day, and you're oversold because RSI has dipped below 30. Now, if you see Corvo, it can be prone to some volatility. I mean, this is one choppy uptrend that it's been in over the past year. So after that initial drop in March, you had a bounce and a retest, and actually a lower low in April, early May before you surged. So this could be happening here. You know, you get oversold, you have a bounce in RSI, you hold above 30 on the pullback in RSI, and then you break out. And that's another bullish failure swing. So this is one still to watch going forward. I think the big trend is still up, but it is a very choppy one. Here is Amphenol, and this one has a surge and a breakout to a new 52-week high, and then it is consolidating with what we call the high and tight pennant. Sometimes these are flags as well, but basically you have a big surge, say 86 to 96. You stall, and if you get a breakout here, that's going to open the door to the low 100s for this stock, and it's clearly leading if it has a 52-week high there in July. Here's Honeywell, and it is part of the industrial sector, and I've highlighted it before. It has the higher high here from April to May, another higher high from June to July, and look at that big surge and breakout. And then you can see this resistance zone turned into support, and you got the throwback, classic technical analysis. You break out, broken resistance turned into support, you get a throwback, and now we're bouncing. So it looks like Honeywell is going to challenge its prior highs, and I think this is a continuation of the bigger uptrend, so I do expect new highs. Now, also in the industrial sector and part of the defense group, you got Rockwell Collins, and this looks like an ascending triangle, all right? This has been a pretty choppy uptrend since you had this surge, and you kind of been chopping higher since, say, November. But you do have higher highs, and this ascending triangle has resistance around 138. You can see the higher lows coming in, and a breakout there opens the door to more new highs. Now, Lockheed Martin is an interesting one as well. It is in the defense ETF ITA, and you can see that it fell really with that sharp decline, tried to bounce, and then went down again to a lower low. But what caught my eye is that sharp rebound, the pullback that looked kind of like a wedge, and now we've broken out of that wedge. And you can see the 50-day has moved back above the 200-day. So that kind of makes the argument for a long-term uptrend resuming here. So this wedge breakout I would call bullish and expect higher prices. You can probably reevaluate on a close below 315. Now another one in the defense group is Raytheon, and it also fell on hard times in April, May, June, and July, but it looks like a falling wedge after a massive advance to that new high there in April. So we got some firming around 190, 195. We had a pretty sharp dip, but managed to recover. Then some more firming, and now we're starting to turn up. So it looks like Raytheon could be poised to break out there around 203, and that would signal a continuation of the bigger uptrend and get it out of its wedge. You can also see that bullish failure swing working in RSI because you went below 30 here, you bounced, You held above 30 on the pullback and now are turning up. Moving to technology, we have Accenture, and I highlighted this one before after the pullback when it became oversold. You can see RSI touching 30 there in late July. And, this is a 52-week high here, and actually 52-week highs in February as well. So the long-term trend is clearly up. And that pullback, even though it looks drastic with that sharp decline, was more of an opportunity than a threat, I think. And now we have that little mini breakout there and have turned up. Here is ANSS, and this one has been on my radar for quite a while because it's been a nice, steady uptrend here. You have a pullback working. You can see this kind of resistance zone marked by these highs here from January basically until May, and we broke out with a 52-week high here in June, and now we pull back to that zone and are firming. So watch for an upturn to signal that that rally is getting back on. The correction is ending, the bigger uptrend is resuming, and we had RSI, of course, moving below 30 in late July. Now here's one of the more volatile ones, Tableau Software, DATA is the symbol. But we had a nice little breakout there in February, a nice gap and breakout in March. There's that sharp decline that looks scary, but really sets up the mean reversion opportunity we had there in June. And then we moved to another new high. Now we have another scary decline, but it looks like a wedge, all right, some sort of a correction. And we got a clear resistance level there around 105 to watch for an upside breakout that would open the door to new highs. Global payments has been on my list for quite a while. You can see I thought there was a triangle forming here in March, April, May, and I thought that was a breakout there. There's a better triangle line. But then we moved back into that trading range, and now we've got another triangle. And look at that gap, pretty strong gap and a breakout, and that's a 52-week high. A little bit of a pullback, and now an upturn. So global payments is at a 52-week high. It's on trend. It's leading. This is a stock we want to be interested in. Now, analog devices is a bit different because it's part of the semiconductor group, and that group has been hit hard with weakness in some of the semiconductor equipment companies like Applied Materials and Lam Research. But I still think this is a long-term uptrend in analog devices. And so that means I look at this decline and I treat it as a correction. All right, I thought it was ending here, but it didn't. Now we have the gap down and sharper decline, but RSI is near 30. So we're getting to where we're almost oversold, and we're getting into that zone where you get a retracement reversal. You can see you've retraced 50 to 62% of the advance from April to early June. So this is the level to watch. Maybe a breakout there around 95 and change would be the first signal. And of course, a breakout at 99, 100 would completely reverse the wedge. All right, got a couple quick ones to go through. Here's Texas Instruments. There's the breakout, and it's testing support here. Watch for a bounce off support. We got F5 clearly leading with that wedge breakout and a 52-week high. Ultra Beauty looks like it could bounce off this broken resistance turn support zone. So watch for a breakout at 240. And JB Hunt is getting a breakout after a pullback within an uptrend. There's the big uptrend, and now we're breaking out of a wedge. All right, that concludes this edition of On Trend. If you have any questions, comments, or feedback, send an email to askarthur@stockcharts.com. Thanks very much for tuning in, and remember to stay on the right side of the trend.